Hey everybody, welcome back to the channel. Today I'm looking at another super investor, and that is Bill Gates' portfolio as of the end of Q2 2022. So this is his portfolio from his foundation trust, and it's about $17 billion in this portfolio. So this is not a small portfolio by any means. He has roughly around 15 stocks or so in this particular portfolio. Keep in mind, we're going to be looking at his positions on his 13F filing. So these are only on the American Stock Exchange. So if he owns anything outside the American Stock Exchange, it won't be on this list that we're going to be talking about. But the reason why I'm talking about his portfolio, because I have not done that on this channel, is that he made some very, very interesting moves. One stock in particular that I really want to focus on in this video. So let's just jump right into this. So let's first talk about the stock that he reduced during the quarter, and that was Canadian National Railway, ticker symbol CNI. So he reduced position by about 21% in the quarter. So not a massive reduction, but just keep in mind it is the fourth largest in his portfolio. So it's around 6.5% of his portfolio right now. His largest position in his portfolio is Berkshire Hathaway, ticker symbol BRK.B. Now he added around 20% in this particular portfolio. So it's around 53% of his total portfolio. So just like we saw with Norbert Liu, almost 50% of his portfolio is Berkshire Hathaway. We're seeing something similar with Bill Gates as well. Now, another company he added to in his portfolio that he already owns is Madison Square Garden, ticker symbol MSG. He added 112%, which is basically doubling up on his position that he had. But keep in mind, it's only about 0.5% of his portfolio. So really, if we take a look at his his top four position in his portfolio, I mean, you're talking like 85% of his portfolio in his top four positions. And that's Berkshire Hathaway, Waste Management, Caterpillar, Canadian National Railway. So even with adding 112% to Madison Square Garden, it's only 0.5% of his portfolio. Still very, very tiny position overall. So interesting there. Now, Madison Square Garden is just like from the name, that is Madison Square Garden. And, you know, that's been a company that has been on the Magic Formula list for quite a while. I think maybe it finally dropped off. I'm not sure if it's still on there, but it was on there for a very, very long time. If you don't know much about the Magic Formula list, that was actually created by Joel Greenblatt. Basically, this formula goes out to the market and figures out, you know, which stock has the highest, return on invested capital, and also the lowest, I guess the highest earning yield, which is kind of opposite of a PE. And just kind of lists those stocks. And so, at least from the Magic Formula list, Madison Square Garden had a very high ROIC and a very high earnings yield, and that's why I was falling onto that list. But I think that the main reason why that was on the list for a long time was that Madison Square Garden being in New York, it's kind of dependent on how well those teams are doing. You're thinking about like the New York Knicks, for example, that play out of there. They haven't been all that good for a while. So this could just be a play on some of those sports teams in New York getting better over time. And then also with the pandemic, people not going to games and that sort of thing, people getting out more now, maybe that will create some more revenue and increase the stock price over time. All right, so now let's talk about the two new positions in his portfolio. And these are the ones that were just fascinating to me, because one of these I own myself, and it was quite a surprise he added these to his position overall, because if you look at most of his stocks in his portfolio, these are profitable stocks. I mean, we've already talked about Berkshire Hathaway, Waste Management, Caterpillar, Canadian National Railway, Microsoft, Deere & Company. It goes on and on. Where these two companies are not profitable, and they're burning a lot of money, actually. And that is Carvana and Vroom. So Carvana is ticker symbol CVNA, and Vroom is VRM. And they're both in the same space. They sell used cars online. So these are e-commerce used car businesses. So they've been decimated, absolutely decimated. So in 2021, along with a lot of their tech stocks, these stocks just shot up. Carvana specifically shot up well over $300 a share, fell all the way down to about $20 a share just a few weeks ago. In fact, from the end of last month, so the end of or excuse me, end of the last quarter, June 30th till now, Carvana is up 110%. Vroom is up around 70%. So they've had huge moves since then. So those two positions have done very well in his portfolio. However, they're very, very tiny positions. So Vroom is 0.02%. Carvana is 0.07%. So obviously not a ton of conviction. Maybe he's just buying them and just kind of seeing kind of how they perform, whether he adds or not. We'll have to see going into the future. But that, again, is very interesting because these are not stocks that make any money. And in fact, I would say, or companies that don't make money. So the smallest ones is portfolio. So Weber, Coupang, Carvana, Vroom, these companies don't make money. So obviously, he doesn't buy a lot into them initially. So we'll kind of see how that kind of plays out. But again, Carvana is one that I particularly own. I like a lot. In fact, it's moved up to being a pretty large position in my portfolio, and I think there's a long runway there. But it'll be interesting to see over time, can Carvana and Vroom live in that same space? CarMax is kind of getting into that space as well. There's other ones. Shift, I believe, is another one of those companies as well that's trying to get in that space, and it costs a ton of money to create those logistics. And Carvana is by far ahead of really their competition. So can they fend off Vroom? Can they continue to hold off CarMax? That whole industry in general is just so segmented. If you think about all these used car dealerships across the United States, I think the largest car dealership owns 2% of that space. So there's, again, very segmented, very fragmented in that business overall. So we'll just kind of see, because Carvana, I think, sold around 400,000 cars last year, which is 1% of the total used car market. So there's still a long runway there, but interesting, very interesting overall. And we'll see if, since it's run up so much too, will he sell or he'll continue to hold? We'll just kind of have to see. He doesn't usually do a lot of movement in his portfolio, so I'll be interested to see what he does next quarter. So those are his, position in his portfolio. Those are his adds and buys. And reductions in the quarter. What do you think about his portfolio overall? What do you think about his new buys in Carvana and Vroom? What about his reduction in Canadian National Railway? Love to hear from you guys down in the comments section. If there's any other super investors you want me to do a video on, drop it down below. Thank you so much for watching. I'll catch you on the other side. Take care and God bless.